Hello, I'm Sue Lloyd, Vice-Chair of the International Sustainability Standards Board. I'm going to provide you with an overview of IFRS S2, our climate-related standard. Although this presentation focuses on S2, S1, our general requirements standard, and S2 are a package, so in some instances I'll make references to S1 to explain some of our key concepts in S2. IFRS S2 Climate-related Disclosures sets out the requirements for a company to disclose information about its climate-related risks and opportunities, building on the requirements that are described in IFRS S1. S2 fully incorporates the recommendations of the TCFD, the Task Force on Climate-related Financial Disclosures. It requires the disclosure of both cross-industry and industry-specific information about climate-related risks and opportunities. Climate-related risks include both physical risks, such as those resulting from increased severity of extreme weather, and transition risks, such as those associated with policy action and changes in technology that can affect how a company can run its business in the future. Climate-related opportunities refer to the potential positive effects arising from climate change for a company. In applying S2, a company identifies and discloses material information about climate-related risks and opportunities. S1 helps companies work out how to do this. Investors need this information to understand how climate affects a company's performance and prospects, including its transition planning, its ability to adapt, and how climate risks manifest in its value chain. S2 is required to be used with S1. And that's because S1 sets out the way that companies should approach reporting. For example, S1 establishes the key concepts, such as the need for connected information and how to think about a company's value chain. It provides important guidance on the assessment of materiality to be used when applying S2, which determines which particular disclosures a company needs to apply given its particular circumstances. S1 sets out the qualitative characteristics of the information that has to be provided when you use S2. So, for example, the fact that the information needs to be relevant and representationally faithful. S1 also sets out the requirements about the reporting that has to be provided, such as that the report needs to be provided at the same time as the financial statements, that the reporting needs to be provided in the general purpose financial report along with the financial statements. And IFRS S1 also explains how to deal with things like changes in estimates and errors, provides relief from providing commercially sensitive information about opportunities, and when a company must disaggregate or aggregate information. So for any of those aspects of reporting to do with climate, an entity will need to refer to IFRS S1. Just like S1, S2 requires a company to disclose information about its governance, its strategy, and its risk management, as well as metrics and targets, but specifically in this case in relation to its climate-related risks and opportunities. Some of the key requirements in S2 are found within strategy and metrics and targets. So, for example, S2 asks that information be provided about climate targets that a company has set, such as its GHG emission targets and how it plans to achieve them. These are strategy and decision making, including a transition plan a company has, current and anticipated effects of climate-related risks and opportunities on a company's financial performance, financial position and cash flows, and information about the assessment of climate resilience using climate-related scenarios. We also ask for information about a company's Scope 1, 2 and 3 GHG emissions and associated guidance to help with the measurement and disclosure of this information, and information about industry-based metrics that are associated with common business models and activities in a particular industry. Climate change and the uncertainties associated with that can affect the resilience of a company's strategy and business model. To help investors understand a company's climate resilience, S2 requires a company to disclose information about the implications of climate change for its strategy and business model, and its financial and operational capacity to adjust or adapt over the short, medium, and long term. S2 requires all companies to use climate-related scenario analysis to inform their disclosures about their resilience to climate change. But S2 does not specify which scenarios a company should use in its analysis. Rather, it requires the company to use relevant scenarios and provide information about the scenarios it has selected, and to provide information about other relevant assumptions that it used when it undertook its scenario analysis. S2 includes guidance to ensure the requirements to undertake scenario analysis to support resilience disclosures are proportionate. This includes guidance on how a company is required to determine its approach to scenario analysis that it uses to assess climate resilience. Climate-related scenario analysis encompasses a range of practice, from qualitative scenario narrative to complex statistical modelling. And taking this into consideration, the ISSB decided to require that a company use an approach that is commensurate with its particular circumstances, and that a company should use all reasonable and supportable information that is available to them at the reporting date without undue cost and effort. To determine what approach is commensurate for the company's circumstances, a company is required to consider both its exposure to climate-related risks and opportunities. The greater a company's exposure, the greater the need for a more sophisticated scenario analysis, and also to consider its skills, capabilities, and the resources available to undertake climate-related scenario analysis. S2 requires a company to disclose its Scope 1, Scope 2, and Scope 3 greenhouse gas emissions. In other words, the standard requires companies to disclose information about their direct and indirect greenhouse gas emissions. Emissions are required to be measured in accordance with the GHG Corporate Protocol standard, unless a jurisdiction requires a company to use a different approach to measurement. Not all companies currently use the GHG Protocol corporate standard to measure their emissions. If a company is using a different measurement method, it's permitted to use that method in its first year that it applies the standards, and then to move to using the GHG Protocol from the second year onwards. This relief is intended to help companies when they first start to use S2. A company must consider all 15 categories of the Scope 3 GHG emissions set out in the GHG Protocol standard, with information being disclosed about the categories when it's material for the entity. The 15 categories of Scope 3 GHG emissions are intended to provide companies with a systematic framework to organise, understand, and report on the diversity of Scope 3 activities within their value chain. This includes categories such as purchased goods and services and use of sold products. One of the Scope 3 emissions categories is investments, category 15. S2 requires companies with activities in asset management, commercial banking, or insurance to disclose information about their financed emissions, including the emissions that banks and investors finance through their loans and investments. This includes information about a company's absolute gross financed emissions disaggregated into Scope 1, Scope 2, and Scope 3 greenhouse gas emissions, and information about the industries that finance is provided to. S2 requires a company to disclose industry-based metrics that are associated with common business models and activities that are common in a particular industry. As the effects of climate-related risks and opportunities vary significantly by activity or industry, these metrics are important for investor understanding. To provide these disclosures, companies are required to refer to and consider disclosure topics and associated industry-based metrics included in the industry-based guidance on implementing IFRS S2 that's included in the standard. This guidance is based on the ISSB standards with modifications to enhance their international applicability. Disclosure topics identified in this guidance represent the climate-related risks and opportunities that have been identified as being most likely to affect companies in a particular industry, and the associated metrics that are most likely to result in the disclosure of material information are included to help companies when they apply S2. Throughout this presentation, I've touched upon some of the guidance that's included in IFRS S2, but this slide below provides a summary. In short, we've developed additional guidance that companies must use when they apply the standard, as well as illustrative guidance and examples that illustrate aspects of the standard that are optional for companies to make use of. So that provides an overview of S2. Please check out our other webcast about S1, our General Requirements Standard, and you can access both of our new standards on our website at ifrs.org. Thank you for listening.